Hey guys, welcome or welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, we're going to be going through our full March miner analysis. This is a super interesting episode because this is the last full month prior to halving and it closes out Q1. So we've got a lot of numbers, charts, and tables to go through in today's presentation. But before we do, please take a second, hit the like button, you guys. It's 100% free to do. It's a huge help to myself and the channel, and Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join. We just crossed the 43,000 subscriber threshold. We'd love to have you as part of the community. And finally, leave a comment in the section below. Let us know what you thought about March numbers, how you think the halving in April here is going to impact production results for this month, and your outlook for the remainder of 2024. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, Anthony Power is back. He's brought along his tables, charts, and graphs. And this time we're going to be going through March production results, which is an interesting month, Anthony, because this is the last full production month for these miners prior to the halving, which is now only a few days away. So Anthony, welcome to the show. How are you doing this morning?
Yeah, doing good, thanks.
Now, let's kick it off. I know we've already covered a lot of the March results individually as they come out. This episode's special because we get to compare them and look at them all in contrast to one another. So we'll kick it off with the main table here, Anthony. For me, I would say the tail of the tape this month was really that race we saw at the front end of the batch between Core Scientific, obviously CleanSpark, and Marathon, jockeying it out almost daily and coming in very close in terms of their final production. What did you see in the month of March?
Yeah, I mean, the consistency of Core Scientific shone through actually because they've been fairly consistent every month now for the last 3 or 4 years. So they might not always appear at the very top of the table, but they never appear anywhere near the bottom of the table. So they're just very consistent. You know what you're going to get every day. 28, 29, 30 Bitcoin on any given day going through every day of March. And we're seeing that number again in April as we're speaking now. Unfortunately for Marathon, it was more production issues. So we go back to that December, which was an amazing month, and we talked about the success of December, and they literally broke every record from a metric position. But we also articulated that maybe we need to look at January and February and March just to see if that can be sustained, and it wasn't. We're talking now less than half the production for December, and it wasn't a good sign. I mean, some days they're producing 1 block, and the next day 3 blocks, then it's down to 2 blocks, then it's up to 6 blocks. And it's great when you produce 6 blocks in a day, because that's what they should be producing with their hash rate, but it's just not consistent enough. And so they produced 894 Bitcoin in the month, but bear in mind they've got 28 exahash plugged in. Now they're informing shareholders that of that 28 exahash, only 18.3 was actually operational. So that's 10 exahash gone. 10 exahash. There's only 3 miners mining above 10 exahash. That's like a whole miner not working for the whole month. So that's an impact on their production. There are some positives. I mean, at the end of the day, Marathon have got a hodl now well over 17,000. So they've got a hodl value which is based as at the end of March. But the hodl value is worth about 1.2 billion at that point in time. Bitcoin prices pulled back a little bit, but still over $1 billion as today. And they've got a cash balance of over 300 million. So we've talked about this before. Going through the halving, they'll be able to have money there to look at any opportunistic purchases to grow the company organically, and so that's a one possible. The production, you have to look back over the last 2 years. I think they've had about 2 months in the last 2 years where it's been where it should be. Maybe once they get these sites under their control, the ones that they've purchased, and they're going to be moving to them at the end of April. Maybe when we look at the end of May, we see a better picture. But at the moment, Core Scientific are certainly, outpacing them. They actually produced 906 Bitcoin, so their average was just over 29 a day, and they sell on a daily basis. They're required to sell on a daily basis. That was one of the conditions of them coming out of Chapter 11. So they haven't got a hodl. They do receive payment for their hosting business in Bitcoin. So when you look at the amount sold by Core Scientific during the month, they sold 981, and you're thinking, how can they sell 981 when they're only producing 906? They do receive hosting revenues in Bitcoin, so they can sell more Bitcoin than they're actually producing from self-mining. But no, it was a consistent month there. They're looking, again, further at, expansion plans to get to 21.8 exahash by the end of the year. And but they're also at the moment they're achieving 19.3, so they've got a couple more exahash to go to get to the end of the year. And you'd like to think that target is more achievable. And we'll talk about some of the other targets as we go through this update. If we look at the next, we look at like Bitdeer. Bitdeer, we've had so much information about Bitdeer at the moment. The fact they brought out the Seal miner, that's been talked about a lot. We've heard a lot of information about the Bitmain new miners coming out there. Their sort of S21 Pro is now at 15 joules a terahash. The Seal miner A, which is the first generation miner for Bitdeer, that operates at 18.1 joules. And, rumor has it that, if they bring out the second generation miner, that could even improve on what Bitmain have brought out now. So we're going to have sort of like an efficiency race now between some of these companies who are producing mining rigs as we go through to the rest of 2024. I'm amazed because last year in 2023, when the XP, was being utilized through a lot of the companies, that was a big jump from the S19. So we're seeing even bigger jumps now, and who knows where it finishes.
Well, and I was going to say, Anthony, we just saw, I think it was CleanSpark upgraded their option order to the S21 Pro model, and we're starting to see even more enhancements in the hardware side of things. Now, I love the full table here because we get to see so many of the different metrics, but what you do really well is you now break it out into some of these smaller ranking tables. And you mentioned the number of Bitcoin being sold in relation to Core Scientific. Adam had explained that that was part of the bankruptcy process as well, as they needed to liquidate their Bitcoin. In terms of the other companies that stand out here, percent of production sold, again, CleanSpark, Riot, virtually no Bitcoin being sold this month. We're seeing them really amass as large of hodl as possible. And then on the other side, Anthony, you've got some of the smaller players like DMG, for example, selling in excess of 144% of production. Why do you feel we're starting to see this? I guess the large companies are bolstering their balance sheet with Bitcoin. A lot of the smaller ones are still continuing to sell. Is this out of necessity, Anthony? Just the large players have more flexibility on the balance sheet? Or do you think this comes down to the strategy that Dan and Paul and some of the other CEOs have talked to us about?
Yeah, I mean, looking at the table of Bitcoin sold there, most of the miners actually sell on a daily basis. DMG's is high at 144% because they've just literally purchased, 4,500 S21s, which are being delivered as we do this podcast and being installed. So between now and the end of June, that's going to add nearly an extra exahash to their target. So, they're a relatively small mining company when you compare them to some of the other companies in that table. But, we went to go out and buy 4,500 S21s. That's a significant amount of money. And what DMG have done that some of the miners haven't, they've not gone to the dilution. So they're using, their revenues, and they're using Bitcoin to pay for these mining machines. So, that'll nearly double their hash rate by the middle of the year from what it was at the start of the year. So that's, a good position to be in there. And yes, they've had to sell a bit more Bitcoin. They've still got a reasonable hodl, well over 400 Bitcoin in the hodl. So going through halving, they've got a bit longer to last before they're going to be asked to switch off the lights, compared to say some of the other miners. But they're sort of like, looking at some of the miners that are not selling. So we have seen this sort of like this graph has been similar now for quite a few months in the likes of a number of miners aren't selling anything, and we look at CleanSpark and Riot, literally selling a few Bitcoin, and we think that's probably because it's part of compensation packages for directors, and not necessarily a requirement to sell Bitcoin for the company. I mean, why would you sell 2.8 Bitcoin if you're producing, nearly 680 whatever? It's part of compensation that they really had to do that. But they're making a decision that they believe the Bitcoin price is going to rise. Well, the Bitcoin price has dropped off since the end of March, and so we've said before, when the Bitcoin price is rising, it's great to have a hodl strategy, but when the Bitcoin price turns, and then you see them still hodling, and these other miners have been making the benefit of getting that daily rate every day, you start thinking, have we done the right strategy? And there was a piece of work done last year about, going back over the last few years, the hodl versus the selling Bitcoin. And, it was somewhere in the middle. It was like, selling a proportion of your daily production was an effective way, would have been the best way over those last few years. But no one was arguing the fact that Bitcoin price was still rising. We reached an all-time high in March, so the Bitcoin price was over 73,000, and so these miners have made good use of that. 71,000 at the end of March. So when you're looking at that from a revenue on the balance sheet, and you've got all that Bitcoin there, but what it does say is those miners who are hodling everything are using the at the market share offerings to basically pay for all their operational and capital expenditure, because you still have to pay energy, and the energy costs are significant. I mean, even the likes of TeraWulf, who are one of the low cost operators of all these miners, and their blended cost is about 3.5 cents. The cost to mine one Bitcoin is $13,000. So if you're producing 700 Bitcoin in a month, and one of the cheapest producers is 13,000 in energy costs, just think of how much you're going to have to sort of like use, sell shares to cover that cost. And is it the best way forward? So you've got more than half the miners are selling on a daily basis, paying for operational costs, paying towards capital costs on that way there, and then you've got a section of them who are sort of like hodling like crazy, hoping that the Bitcoin price will get to some of these targets that these other people on Bitcoin space come up with every day, into the significantly high numbers. So, as I say before, we don't know what the Bitcoin price can be tomorrow. So pointless us guessing what it's going to be in a year's time.
Wow. And that's what I was going to say there, Anthony, is time will ultimately tell. One of these two camps will be right. We just don't know which one it is, right? And your analogy there of selling daily, it's ultimately dollar cost averaging in reverse, right? Rather than buying daily, you're selling daily. And as we all know, generally dollar cost averaging does work out to be the most effective way to enter positions. So it makes sense that it would be a good way to exit as well in terms of your Bitcoin holding. Now, you mentioned TeraWulf, you mentioned DMGI or DMG Blockchain. They also ranked extremely high on the rank by production per exahash. So they were in the top 3. We have our good friends at Bitfarms. Obviously, no shortage of drama and FUD for the month in terms of the Bitfarms camp, Anthony, but it seems they've skirted quite a bit of the Paraguay concerns, but still managed to come out on top. Extremely efficient production and the ability to work these machines to their absolute max, hey?
Yeah, I mean, we sort of mentioned when we're talking about production by exahash, we're generally talking about the likes of Bitfarms, we're talking about Hive Digital, we're talking about IREN, generally those three. Those have topped the charts for the last few years now. But, they don't always top the charts from a utilization. So, a lot of the miners now are, have an energized hash rate. So that's all the machines that are plugged in on their sites. And they'll also provide you an operational hash rate. So that'll take account of any downtime through curtailment, through software, through maintenance issues, through power cuts, and the multitude of reasons why the company can't have an uptime of 99.999%. So all the miners, and actually when we talk about miners giving out that information, Riot Platforms joined that group as well for the first time in March. They actually highlighted what their operational hash rate was, and it was significantly lower than than their energized hash rate. So, you know, we had Jason on the podcast in February, and, you know, he was out there to articulate, you know, that they'll always be judged on their total hash rate, which at the moment is 12.4. We know it's going to 31.5 by the end of the year, and that was with the new Corsicana, the 1 gigawatt site going online literally this month. So I'm looking forward to seeing their April update, if they can, you know, highlight the fact that, you know, Corsicana went online as predicted. But they highlighted their operational hash rate at 8.6. So there's a gap of 3.8 exahash. And, you know, that gap there at the Rockdale facility is you know, it's not far less than what Hive Digital mine. So Hive Digital, you know, up until this month, we're mining about 4 exahash a month. So, you know, to have that many machines offline, and Jason did articulate in that podcast that there were some machines that weren't operating at the level that you'd expect, and they've addressed that. So there's a big order coming through now, and that order will come through between now and September. We're talking about 31,500 machines. Most of those machines are going to be replacing these underperforming machines that are quite obviously seen now in this update. And then they have an extra group of machines that will take the hash rate from 12.4 over 15. I think it's 15.1. And then the rest of the hash rate to get to 31.5 will be produced at the Corsicana site. And all future growth will be at the Corsicana site. That's a 1 gigawatt site. So, you know, their plans to get to 75 or 100 exahash will be managed on that site there, as we see along there. But it was good for Jason to you know, use this month. It basically means that, you know, where other miners are also using an operational hash rate. And if I look through the table now, there's not many miners that don't use an operational hash rate. Most of them, 90% of them do. So to a certain extent, Riot was sort of like not doing themselves a full service by just using that 12.4 and saying, you know, that's our hash rate. You know, the fact that we're only using 2/3 of it, we want to make sure that everyone knows we've got 12.4. But I think it's at least it's addressing the issue, it's highlighting the issue. People know it's machines now, and not necessarily an energy strategy, turning machines off to raise power credits. So it means that, you know, from when we look at the performance in terms of things like rank by production, you know, it means that there's a lot more higher up the table than they were. So, you know, and if you look at the rank by production slide itself, you can see now, and this is what you'd expect to see, the miners are a lot closer together. If they're actually telling you what their operational hash rate is, then it should be that every miner should have the same rate of Bitcoin produced. So, you know, when I started doing this 3 years ago, there was a big disparity between the miner at the top and the miner at the bottom. And now what you're seeing now, that graph there, it's actually a lot closer. Yes, there's still we know that that Hut 8 has still got some issues at some of their sites, and they're being addressed, you know, as you know, this month goes by, and we'll see some improvement there. But if you take away sort of like Hut 8 and Bitdeer, who also announced some issues at their sites, the rest of them are all within a few percent of each other, really. It's not a significant amount. So Core's at 46.9, Bitfarms at 50.2 Bitcoin per exahash. It's like, you know, probably 5% covers 13 miners. And that's not a big gap. I mean, we're talking, I can remember in 2023, some of the gaps per month were 20-30% between the bottom and the top. And because there were some real issues with some of these sites.
And that's, Anthony, because you're using the operational hash rate to calculate the production by exahash. Yeah, correct. Yeah, and
just you know, I mean, I know some analysts just use the total hash rate, and I've spoken to 3 of the most senior mining officers or VP mining, you know, sorry. And I've spoken to, you know, 2 or 3 of the most senior mining, you know, execs in each of these companies, and their thought process was that, you know, the operational one is the one that should be looked at. We also use the utilization rate, and the utilization rate does then look at what they had plugged in. So basically, if you've got, you know, 10 exahash plugged in, but you're only operating at 8 exahash, then there is an issue. You're not fully utilizing your whole machine. So the utilization gives a more indication of who's actually getting the best use of all the machines that they have in their facilities plugged in. I don't look at machines that are on order or are stored. This is the ones that have been highlighted, that they've been, literally, in facilities, and they've been energized. And this month we had a new leader in this particular table. So Bit Digital came out with 97%, followed by Griffin Mining, followed by CleanSpark at 96%. So, and then we had SATO at 94%. And so that gives you a good indication of who's getting the most out of the machines they've got at the moment, who's been able to avoid some of the downtime. And it could be like they've had better use of the weather. Some of the smaller miners tend to do well in this because they haven't got, once you've got like 10, 11 different facilities, all it takes is issues at two separate facilities, and you're having to try and fix those things. If you've got one small facility, it's probably more manageable. So therefore, you can address things, far quicker than you can if you've got sites all over the globe. And some of these companies have got sites in not just North America, but 3 or 4 other continents. So it can be a challenge.
Sure. Yeah, and we're actually working on a map for our website that'll show the geographic diversification and location of these companies. But that was going to be my point, Anthony, is we're seeing the spread really tighten up on the production by exahash. As you alluded to, the companies are all within a tight band. But if you do jump over to the utilization, again, interesting for me, you see 2 out of the 3 heavy hitters being Riot and Marathon on the low end. Again, to your point, Anthony, the most facilities, the most complex operations. But lo and behold, you've got Core Scientific right in there at the middle of the pack with 92%. But they've also got the scale and the consistency. So definitely an astute observation that I took from that graph. And you're right, we're seeing a lot of the group now in the 90% range. But unfortunately, those 2 big players, Mara and Riot, having a little bit of operational struggles that are showing up in that utilization table. Now, the next one, Anthony, we've talked about Bitcoin sold, obviously, Bitcoin mined for the month. Revenue by energized hash rate. This is probably my favorite chart that you put out. We've got Bit Digital front and center, just over $3,500 per energized hash rate, right? So this is petahash, Anthony?
Yes, it is petahash, yeah.
Great. And for this one, just remind me, do you factor in the other revenue streams here, or is this just proprietary mining?
This is self-mining, but it does include the revenues that are earned from curtailing self-mining. So if a miner is able to curtail energy and gain a benefit from doing that, and we've seen a number of these Texas miners able to do that in 2023 and in 2024. So in August last year, Riot Platforms achieved 31.5 million from their power sales and demand response credits by utilizing an energy strategy. So that 31.5 million was higher than any other miner had mined that month. And they also were able to mine, not as high as expected, because they'd obviously turned off the machines for a significant amount of time, but they still had a decent production. I think their total revenues that month were about 40 million. So in this particular month here, there were some power sales and demand response credit for Riot, but because of the fact that they've highlighted that big gap in their operational hash rate, you can see that they're just not achieving the revenue based on what miners have got plugged in. So that was there. Now if you look again at the top 2 there, you have Bit Digital and you have Griffin, and then followed by CleanSpark. So in a way, it's sort of slightly, when there's not a lot of energy strategies in place, it sort of like mirrors the utilization metric to a certain extent.
Yeah, definitely makes sense. Now, you guys feel free to pause the video, take a look at these charts. I understand there's a lot of data here. Very interesting month though, Anthony. And like I say, this is going to be a real contrast to what we see in April. I'm excited to see your tables and charts come out because of that big halving event. And then obviously in May, we'll see the full impact of the halving. I'll flip it back to you, Anthony, for any closing thoughts, but a very exciting news-filled month to end out Q1, to say the least, eh?
Yeah, as you know, so we had Griffin Mining part of the analysis for the first month, and you know, they were highlighting, you know, long before they joined this group here, that they were having great success in their monthly updates, and you can see from the tables that they've you know, they've kept up that success there. So, you know, one of the smaller miners, but you know, again, it's a miner that, you know, there's data out there on all these miners. There's 35, 36, I think, public listed miners in North America, and we're covering at the moment, you know, 14, 15 of these miners. And so it's, you know, that's the challenge. If we had more resources, we'd probably be able to do all 30, all 35, but then the table would be like 2 screens wide. So it's, you know, that's the challenge that you have. So it might be that we sort of like, you know, maybe look at rotating some miners in during months to sort of like, you know, give an opportunity for them to be showcased as well. So that's something we could look at going forward.
That's what I was thinking, Anthony, a flavor of the month type of thing. So let us know in the comment section, guys, which miner you'd like to see in here, maybe for the upcoming month. We'll do our best to get it in. Let us know your thoughts on March production. Of course, if you're still watching the channel at this point, feel free to hit the like button, you guys. It's 100% free to do. It's a big help to myself, Anthony, and the channel. And if you're not subscribed to the channel, speaking of, feel free to join. We just crossed 43,000 subscribers. We'd love to have you as part of the community. That's all for now, and we'll see you in the next video.